Hello, Culture Matters podcast. I am so excited to introduce you to our guest. Before I do that, here is a quote just for this episode. Good character is not formed in a week or a month. It is created little by little, day by day. Protracted and patient effort is needed to develop good character. Heraclitus, the warrior trainer.
I love it.
Our,
I was going to say,
our
was,
guest,
was was that you?
yeah, I wish our guest today is man, a great supporter of Culture Matters. Know me longer than most of you listening, so they get kudos for that. They're going on be almost 17 years, maybe a tad more in the real estate business, but not just real estate. Okay. If you know real estate, you're probably afraid at some level of those commercial real estate advisors, afraid and respected, feared and admired. Andre Watson, episode 179, season 15. If you haven't listened to episode, get your butt over there after this episode. Andre Watson has been an advisor to very successful people and up and comers and ones that want to keep their wealth, understanding the commercial real estate landscape for a long time, and a great friend that goes way back. And I'm glad to have you back on the show to pick your brain at all things commercial and business and what's happening in the greater Philadelphia region, but also macro and just philosophical. So thanks for being our staple commercial real estate advisor on the show at this juncture.
Hey, man, thanks so much for having me. Always good to see you, brother, and always nice talking to you.
I want your thoughts on that quote. You know, the character formed in a week, not a week, or a month, but little day by day. Because I know how hard, or my assumption is how hard you've worked to build what you've built and climb the ranks. So like, what do you think about that?
You know the old saying, Rome wasn't built in a day.
Yes, sir.
Right? Same kind of uh, uh, same kind of message. Um, I would say that just like trust and relationships, right? It takes time, and I think that the more adversity someone has in their lives, especially I would say men who are devoted to a cause greater than themselves, the more adversity that we go through, the greater the character is built within us.
Hmm.
That's a great quote. I love that quote. It, time, you know, time and suffering, for lack of a better word, will really show you what you're made of. And when I say suffering, I don't mean, like starving, but just going through adversity.
When I think of that quote, I think of my assumption of commercial real estate relative to a lot of the other service pieces because I think longer, I could be wrong about this, but I think longer time horizons on working on a deal, working on some type of opportunity. So I'm thinking, you know, am I wrong to think that or
No, you're absolutely right. I mean, the sales cycle for us is much longer than residential counterparts would be. If you're buying a house, uh, you go see it, whatever you like it, you can execute a sales agreement and close in 30, maybe 40 days, right? Easy peasy. Um, in 30 or 40 days, like we're still maybe a quarter away or sometimes halfway through our due diligence on,
well,
on a deal, And I mean, not saying that it doesn't happen. There is a deal that uh, I transact um, a couple of years ago, there where it was um, you, you get spoiled when you see things like this. But the buyer is a very successful, very smart, very, very smart real estate investor. Um, Unlike anyone that I've met in this business in the time I've been here, the guy is so smart, right?
Whoa.
And contract to close was 20 days on a $14 million deal. Cash,
Whoa.
wrote him a check for it, $14 million, right? That is a rarity. From start to finish, from execution to close, it was about 20 days.
So I'm a little upset that how do I get there?
Hey, listen, I asked him the same question. How can I be like you when I grow up?
Well, without divulging any of the person's, stuff, like their identity or anything, what did you learn? Was there a pretty what was the answer?
Well, this particular gentleman, I've known for a number of years, maybe like 10 years or so. I've done a number of transactions with him. His deals are usually very quick, 45 to 60 days. Um, uh, he is so in tune to and knows the zoning code within Philadelphia County, not just in Philadelphia, but really anywhere where he does a transaction. Philadelphia, I'm sorry, Pennsylvania, New Jersey, New York, and Connecticut, right, is where he does a lot of his work, right? And he knows the zoning codes of those cities or those the local towns so well, right? That when he makes an offer, he knows exactly what he can and cannot do with that property, right? And mind you, some of it is a risk. And he's taken a huge amount of risk, and he's gotten beat up a couple of times, but most of the times he wins.
Wow. What type of stomach do you think you need to take risks in real estate investment?
Well, it's a good question. It's not a question of what kind of risk that you're willing to take. It it I would say it's more about your risk tolerance, right? um uh are you willing to lose the shirt on your back? Right? Are you willing to mortgage your family's house, right? Or are you not, right? I've met people who, there's a gentleman who I know who, a very successful real estate investor. He's been in the business for probably 35, 40 years now, right? And you know, he said, well, the streets aren't bloody enough for me to buy yet.
Wow. Wow.
Right? So I said, I'm like, hey, it's a depressed market. There's a shift in the market. He's like, yeah, not not quite enough yet for me. So uh, it's interesting to see how everyone has their different risk tolerance,
Wow.
and uh, that all. If you want to do something like that, it's going to depend on what your risk tolerance is, and also what kind of return are you looking for. There are some people who are long-term players, okay, who may not get the return that they're looking for right now, but they know, God willing, 5, 10 years, 15 years, right? That asset will not only appreciate, right, but they will be able to, whether it's raise the rents, okay, they can refinance. Like there's so many things that an owner can do, right? But it all depends on your risk tolerance and also what your exit strategy is
Hmm.
for going into the asset.
A scenario like if I have patient capital and I buy a lower cap rate, but for cash, I'm really bullish that it's going to appreciate over the next decade significantly. I may just do that, and I'm
Yeah,
just going to
well,
wait.
right. Great point. So, I mean, in this market, especially if you're writing a check because you need to put your money into something, right? It's usually because you don't want to pay capital gains tax. right? And it's better to take a lower cap rate. I'd rather get 5% return on my money than pay the government 25 or 30% of the $5 million that I just earned from selling off, a piece of real estate that it was time for me to get rid of.
Are you referring to like the 1031
Correct. That's the
exchange?
1031 exchange. Right.
Wow.
Right. So doing that right now actually with a buyer, an out of town buyer. This particular person and his partner, their company, they have probably about 12, 1,300 apartment units in one of the counties outside of Philadelphia. And
Wow.
they're looking to move into another county, and they have nothing there. We are working on a sale for 72 units. Now that's, one of those is an entire apartment complex that has about 30 or 35 apartments in it, right? And then another one has like I think 15 in one place, right? So they're not scattered, right? But um, they are spending that money because they sold something very big and they don't want to pay capital gains tax. So they're going to roll it into a 1031
Mm.
tax deferred exchange.
The day that you, what's your advice to someone listening to this that in their own experience, because I'm thinking they have that moment where I just closed and I got that commission check of maybe a year of work or 7 months or 2 years. And now my life is completely different. How do I not, right? It's almost like to me, like I'm thinking, like, the people that win the lottery and then no one ever finds out versus
Right.
people that everybody knows we're going to the bar, maybe. Because there are people, it's like, how do we stand on the shoulders of giants so we can see farther?
So
And what's your wisdom up for here for this?
you're talking about the brokers, right? You're talking about guys like
Like, well,
us,
then I thought about it a little bit more. I'm like, everybody could relate to that one way or another.
right?
It might not be as big as like some commission on a $20 million thing or whatever. But yeah, but you could start with the brokers. Then I'd like even general, right? Like, how do you condition yourself to be responsible?
So, um, if you get a substantial check, let's say you do a deal, you're working on it for a little bit, and you make two, three, $400,000 on this one deal, right?
I could cry thinking about that.
you know, it's listen. There's one thing I've learned being in this business, Jay, and it's that as hard as it is to earn a dollar, right? It's way harder to manage that dollar than it is to earn it, right? And my advice to anyone, first of all, I don't think I need to give financial advice to real estate investors or developers, right? Well, maybe some developers because some of them are kind of loose cannons, but but um, uh, to anyone who's in the business and who are on the cusp of doing a deal like that, I would say sit down, have a conversation with your accountant, right? And make sure that you have in place an entity, whether it's an LLC or an S corp or C corp, whatever works for you, right? Uh, so that money can go into that entity, so you can better manage it and make it last, right? Because it's very easy to spend $100,000, 200, 300, $400,000. That money goes by so quick, you know, and like, in a month or two, you're like, wait a second, where'd all my money go? you know, and
Wow.
as far
Yep.
as investors go, so I'll share a little story with you. I don't know if I should say this publicly or not. so, you know, debt is not taxed, right? So, for example, if I have a building that I'm selling and I've owned it for 20 years and I now have to pay capital gain. Let's say I'm selling it for $1 million, right? I bought it for $100,000, right? I'm selling it for $1 million, right? My basis for capital gains are so low on that,
Mm.
right? That I'm going to get slaughtered. What some might do, and again, I'm so reluctant to say this out loud.
So I just say
Honestly,
it. 'Cause
I
I
don't know
think
if I should, man. I don't want anyone. I don't want the DOJ knocking on my door. You know.
well, I'm thinking that what you're going that the value of debt in in moving wealth around or increasing wealth at a faster pace, right? Because without debt, I might be fighting the forces of tax, but with debt, I am have less. Or did I totally miss it?
No, I would say that with debt, you're paying less taxes. I just say that and leave it there.
But with that comes risk.
There is risk to everything in this business. There
But
is
understanding how to balance risk and return is like another level of genius that some of the wealthiest people that you've navigated with, they just figured out it's like hyperdrive wealth building.
it's amazing some of the people I deal with, how smart they are when
Wow.
it comes to um, uh, making uh, a decision on the risk versus reward part of the transaction or of the deal, right? It's incredible. I've learned so much from some of these people. Now, again, this your forum is public, and there are so many great little things that I've learned that
Wow.
I love to share with people. I just don't know that if it's appropriate to say them publicly or not. You know, in our day and age, people will say anything, just to get clicks and likes or what have you,
Yeah, yeah,
right?
fair.
But I value so much of the education that I get in the business, and I value um, the things that I learned from these people, of how they take such huge risks. And listen, there's been times when they've literally lost everything. You know,
Whoa.
a gentleman, I was working on a deal with someone I represented, and um, the person I represented was the buyer. There was someone else came into the picture that wanted the same building, and um, that person called me because I knew him. He called me. We met. He said, "Hey, I want this building, and I'm willing to do whatever it takes to get it." Right? And I said, "Well, we're under agreement. We're executed, right? And this is a pretty big building, and
Wow.
it's in the heart of downtown Philadelphia, right? And um, the gentleman who wanted the building said, "Hey, set up a meeting with your buyer. I want to talk to him." Okay. Set up the meeting. We all met. We sat down. This other person that came into the equation told my buyer, he said, "Listen, if you don't sell me the building, if you don't take my offer, right, I will buy the entity from the seller, and then I will control the transaction, and I will tie you up in court for years. It'll cost you millions of dollars of legal fees unless you sell me that building today." Right?
Whoa.
That's what I said. Well, I didn't say that out loud. I was thinking that, right? I mean, that's pretty gangster. That's a gangster move, right? My buyer said, "I don't care. I'm rich. I can go to court and I can spend as much money as I want." Right? So the the other person, he kind of backed off when he saw that my buyer had deep pockets and would be able to withstand court for a year or two, right? But I said to this gentleman, I said, man, that's a pretty gangster move. Like, how did you come up with that? He said, someone did that to me down in DC and I lost $5 million.
Holy cow.
Right. So, it's that's very smart, right? Very smart thing. And um, again, it was a risk, right? Because he offered to buy him out so that he offered to pay him close to $1 million above what he had to build an under agreement for, right? Offered to pay my commission, right, as well, and he would get the building and walk away with it. But my guy said, no, I want that building. I'm never selling it, and there's nothing that you can do or say to change my mind.
How important and what component of the real estate wealth building process takes into account the management of the assets? Like how important is that component?
Yeah, so that's a great question. I would say it's like anything else. A lot of businesses fail because of mismanagement, right? A lot of restaurants fail because of mismanagement. I use restaurants because restaurants are very management intensive, right? And it's the same with owning a piece of real estate, whether it's an apartment building or we call it multifamily, right? Whether it's a mixed use asset, um, even if it's an industrial multi-tenant asset, okay? Management is so important. Next to being able to determine your your like your proper risk tolerance, I would say, right? Um, I would say that management is probably next on the list because any ill-propered asset, whether it's stocks, mutual funds, real estate, business, you know, anything that's ill managed will not last too long.
Hmm.
Right? Management is so important. And the thing is that some owners will not hire a third party management, but they will create a management company themselves within their organization and have it be a separate entity so that you know it's close, right? But it's still separate. Like they're not. It's not this alien third party entity that's coming in. That's not fully aware of the style of management that ownership really
Hmm.
wants.
Do you find that if that's done, it can increase shareholder value? I say obviously that's kind of a duh. Like sometimes it can, sometimes it can't. But I'm
Well,
curious if like what scenarios where that's really smart and maybe other scenarios where that's not as smart.
yeah. So I would say that there's a lot of variables in an answer for that question, right? Because if I own 2 million square feet of office assets in a major market, Philadelphia, for example, right? Does it make sense for me to hire a third party management, right? When, a light bulb might cost $2, but a management company is charging me $6, right? Or does it make more sense for me to create a management entity within my company and I self manage it,
Hmm.
right? So again, like there are different variables, different ways. There's no really wrong answer to it, right? It's simply a matter of what does ownership want,
Hmm.
right? Do they want a third party management, or do you keep it close to home and you create your own management company and have your staff do it yourself? That way you're close to it and you can be a bit more hands on.
Hmm. Is depreciation a real cost?
Is depreciation a real cost?
Yeah, or like what's your philosophy around, or what have you seen and experienced around depreciation?
Well, I would say depreciation is a real cost when you go to sell, when you have no more depreciation to write off, and then all that depreciation that was written off over the course of you owning an asset has to now be recaptured,
Mm.
right? And that's when that's when the government gets you, you know, because not only are you paying capital gains, but you have to pay for the recapture of that depreciation. You know, so yes, to answer your question, it does have a cost. It's a tremendous cost.
Do you think?
But again, it
Oh, go ahead.
depends. No, I'm going to say it depends because again, there are variables.
Mm. Does it? Have you found that greener entrepreneurs in real estate aren't they don't know understand depreciation? Or the reason I ask this, I see a lot of like ads for real estate investing
Right.
or like courses and whatnot that seem to almost promote the like speak to the part about how you obviously advantage you there's a tax advantage for depreciation.
Right.
I don't see a lot of the pundits saying anything about putting money back into the property, but I do see a lot about Ferrari payments and stuff.
Ferrari payments is great. So
You know what I'm
I
saying? Like I got the
yeah,
cash up for the building for my Ferrari.
you're right.
I didn't hear anything about what you just said very intelligently, right? Maybe they need to listen to you and not those ads. You see what I'm saying? Like I want to educate our
So my thought, so this is like I see those guys as the well, not all of them, but I see many of those guys as kind of like the real estate version of Joel Osteen, right? So, you know, Joel Osteen favors himself to be a pastor, right? But really, in actuality, what he is a motivational speaker, right? And those same guys, um, uh, the people who are selling books and charging you money to go to a seminar on real estate, there's nothing wrong with that, but that's how they're making their money a lot of times, right? So um, I don't, you know, I don't know that there's a right answer, you know, to that question, right? Um, I've been to one or two of those courses many, many years ago, right? I can't remember one thing that I've learned, right? What I do know is that the guys are telling the whole audience how many cars they have, you know, um, how big their house is, right? Which is all great, you know, like I guess it's easy when,
Firing.
yeah, you like you're catering to people's vanity, right? Whatever, if it works, it works. I get it. That's not my cup of tea.
I think it's you've answered it just more so of awareness that if I'm gonna benefit from depreciation, uh I should keep in mind that at some point there'll be a cost to it, or what have I done to continue to manage the value up
Right.
of the asset. And I've had a lot of people I've met or even on the show investment side that may not have grasped that concept yet. And I wonder if this market is a market where they'll be forced to grasp that concept.
You know, I would say that simply be advised that there's a cost to everything. You know, like there's nothing in this business, or I guess in any business really, that's totally free or does not have some kind of a ripple effect with costs,
Mm,
whether it's now or down the road, right? There's a cost associated with every part of being an investor.
good point. What's the morale now in commercial versus when you were on for episode 179?
For me personally, or just in the business?
I'd like both if you can answer in what order you choose.
Well, listen, the last couple of years have been very challenging, right? And um, uh, one of my colleagues who does he and his partner they sell manufactured homes. They do manufactured housing exclusively across the entire country, right? And that's a very niche market. And um, inventory is limited. So because of that, your cap rates are lower, right? Tremendous value in manufactured housing. He recently had to do a price adjustment on one or maybe two of his listings, right? I've never known him to do a price adjustment on anything, right? He had to
Wow.
lower the price, right? So another associate of ours, he and I were joking that that is the telltale sign that the market is challenging, right? Because our associate never does price adjustments. You know, as a matter of fact, it's usually bidding wars for these types of assets, right?
Wow.
So it's definitely been challenging, and I would say that morale overall for those of us who are professionals and who this is our careers, this is what we do. We are firm, right? Because we're grounded, and at the same time, there are a lot of people who've left the business. They've washed out, right? Because you know the old saying, a broken clock is right twice a day, right? When the market is good, it's easy for everyone to make money, you know. But when the market shifts, unless you really are willing to do the work and know your product, know your market and your product, right? It then becomes very challenging, you know. And if you're not being fed leads, if you don't have your own book of business, right, then you're kind of flailing in the wind,
Yeah.
you know. And then it becomes very difficult for you to transact business. So it ends up washing out a good number of people when there's a tremendous shift in the market like this.
You talk about a book of business. So on the advisory front, some of the type of clients that a tenured commercial advisor would have, these are serious people. What advice do you have to the advisors listening, the people that really want to be considered professionals and have um, great client relationships in their careers, right? How to build those relationships with, um, build that solid book of business. Because, yeah, my assumption is that, well, in just the various commercial people I've met throughout the years, it's like the types of people that you're interacting with are potentially in another, paradigm, universe, world.
Right,
So like, how do we become? Here's the question: the trusted advisor.
right. Yeah, great question. I mean, what I've been able to build a book of business simply by doing one thing. Well, there's a couple of things, but the main thing is lead generation, right? If you're not doing your lead generation, then you might as well just, you know, we like, why are you here? Right? That is the cornerstone and the backbone of being able to do business is to do your lead generation, right? Because without it, you're just some guy sitting in an office waiting for the phone to ring, you know? And listen, if you've been in the business for 20 years and everyone's calling you, then hey, God bless you. You can do that. But for us mere mortals, you know, we spend a lot of time on the phone daily. Granted, there's sometimes when you have to do so much deal management that you have so much activity going on where you don't get a chance to. But it should be in your schedule. It should be done religiously, and it should just be second nature to you. You shouldn't even have to think about it. You know, if you're not doing it, then you should feel guilty about not doing it.
Mm.
Right? Lead generation, you know, going on those appointments, developing those relationships are the cornerstone. of being able to do business.
For those that are listening that are accredited, looking for strong general, let's say people to partner with that are like in it to win it, that's their thing. What are they looking for in a well, I don't even know what to call that, in a general partner, or in a steward of their capital? I don't know what the terms are that you'd use, but like for the limited partner, like they're going to participate in like some kind of syndication or something like that. What would they look for in the management
Talking about like
company?
people who are looking to invest with people who are doing deals.
Yeah, like that's their thing, right? That's their business. They do deals. Maybe they build up a book of limited partners over time. Like, what should the limited partners that are listening to this, people that are either approached to do that or want to go and get into alternatives, what should they be looking for?
Yeah,
Or what are some red flags in those types of, because you're interacting with over the years all these investors, right?
right,
The best ones are like this, the worst ones are like this, and their shareholders, if they're private, they're
right,
just private people, right? So
right.
if we're thinking on behalf of the shareholders, the private shareholders, what are some things they can look for or be weary of if they're approached by a friend, a family, whoever, to invest in their deal?
Yeah, I mean, you know, on on a broad scale, I would say that um, REITs are probably still one of the safest investments for anyone, right? Who are looking to put their money somewhere where they'll get a decent return, right? I don't want to say that your money is safe because nothing is 100% safe. I mean, we've seen that before, right? And maybe some people forget, but when the stock market crashed in 1929, right? Again, in the 1970s with the fuel oil crisis, right? In the 1988 or 89 SNL loan scandals, right? Like there is nothing that's 100% secure all the time, right? But you can, you know, minimize your risk, depending on what you put your money in. And I still think that commercial real estate, is probably um, uh, one of, if not the safest place to invest, where you're you are minimizing your risk as much as you possibly can. you
Hmm.
know and um, friends and family looking to get into the business to invest money. Listen, I would be cautious. um, I've seen in this business where family members got together and with some friends, and they put their money in together, and it didn't turn out well. If you're going to invest your money with someone, you need, and if you're a limited partner, uh, you can't be calling up that managing partner every day, telling them what you think and want to try something new. you know, just if you're going to invest money on the friends and family, in the friends and family level of real estate, right? Whatever it is, whether it's 5,000, 10,000, $100,000, right? Be okay with never getting that money back if anything goes wrong, right? That's all I would have to say, right?
Hmm.
You have to be, you know, you have to live with the possibility that you might lose that money entirely. You know, that's a tough pill to swallow. If you're not willing to swallow that pill, then I wouldn't invest with friends and family.
Hmm. Andre, thank you today for this master class. I should probably add that we're not giving any financial advice, but we are having conjectural, philosophical conversation from
We
a
should
from
do
a
this in
practitioner.
person. We should do this in person. I don't know if you've seen
I'd love to.
how Bill Maher does his podcast. You know, well,
We
me, I'm
need
not
some
a drinker.
cigars.
But yeah, we'll go to a lounge or something. I don't normally have a cigar, but for you, I will.
I'd love it, and it's a great idea. We'll get some of the local Philly, greater Philadelphia area people out, and we'll
Yeah,
smoke
yeah,
some
we can
cigars
chat,
and
have
have
a
some
panel.
chats. That would be so much fun.
You
You know,
let me know.
in closing, yeah, and if you're listening to the Culture Matters podcast and you think that's something we should do, please reach out to me and let me know. I love the idea. That's cool. I'm glad this is live.
Nice.
Just I'm curious. Final question. Your word for 2023.
23 or 24? What year?
Three.
What's my word for 23?
Yeah, if you were to encapsulate 2023 in one word, what would it have been?
Oh, phew.
That's a good one.
Ooh, man. Like that was close. I mean, listen, I think, as I said before, last year or two have been very challenging. You know, deals were still getting done, right? Deals are still being done, but it's not, they're not, they're, people are being more creative with how they are transacting deals now. You know,
Hmm.
they're being way more creative, right? And sometimes sellers, in order to get the money that they want, to get the price that they want for their asset that they're selling, they may have to consider holding a note for the buyer, for a few years at a lesser interest rate than what's being offered on the market, because that's the only way it makes sense. If I'm buying something at a 7% cap rate and my interest rates are 7.25, right? Off the bat, I'm upside down.
It's a great point.
you know, and again, but if I have cash and I don't want to pay capital gains to the government and I can write a check, then that's a different story.
So it's creativity, it's potentially bringing more equity to the table and weathering not even just weathering, taking advantage of the opportunities where they lie.
That's exactly right, Jay. That's exactly right.
I'm always more excited about getting things done after we talk, especially in these times. So I thank you so much for coming back.
Hey, thank you, bro.
I challenge the audience to listen to episode 179, season 15, and connect with Andre if you ever have any questions about real estate in the commercial investment space. He's definitely a top option. And please leave us a review in the Culture Matters podcast. And we will see you next time on the Culture Matters podcast.
See you, Jay.